The Santa rally that traders were counting on may not be coming, at least as of not yet. We got Nvidia sliding. We got AMD taking a hit. AI stocks are wobbling. Bitcoin's fighting for its life above 100,000 right now. The question isn't why we're dropping. It's whether or not this is the major shakeout, fake out before the next big run. Let's break it all down, what's really happening behind this market correction and why tech and crypto are suddenly moving lockstep. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have been not if you've been hiding under a rock, you got to get involved with this channel. Make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, and we give you cutting edge news that you must have our X open. All right, let's get right into it. Before we get into the technicals and we break down exactly what's going on, all right, I just want to state this, and it's very, very important. There's a big difference between trading long term and trading short term. I hope that we all know that. I'm sure that we do. So at our group of professional traders, we plan like investors with a long-term vision, but we execute like traders, one opportunity at a time, because the long term keeps you focused. We have an idea, okay? But that also gives us very wide leeway, okay? The short term keeps us disciplined and protects our emotional capital. Now, there's two types of capital, right? But you have you have your trade capital and you have emotional capital. If you lose emotional capital, if you burn out, if you hesitate, or you start doubting your process, there is no amount of cash that can save you. Cash you can replace. Emotional capital takes time, trust, and discipline to rebuild. So if I try to say it in another way, what I'm saying is we plan long term, right? But we trade in the short term. We adjust as the market shifts. We go long, we go short, we stay fluid. Okay, we understand that like our vision is not going to happen tomorrow. Okay, so the long-term vision, gives us a purpose. We understand what it is. The short-term execution keeps our edge sharp, and it keeps our emotional capital intact because we want to get involved with the market movements. We do. Now, the reason why I'm talking about this is because, well, I got to separate, what's going on. This is the issue we have. Like everybody's like, "Oh, Tom, you're completely crazy. You're in denial. Market is going into a bear market." We still don't see that. Okay, we don't see it. Now, right now, the bears have been proven correct. All right, and we're going to go over into the short term. We're going to be talking about the short term. We're going to be talking about the ghost in the machine that we actually introduced on October 28th or something like that, or 27th. We talked about this potential double top. Well, actually, we brought it up on, where did we bring it up on? We brought it right here. I actually thought it was sooner than this. I think we started talking about it here, October 13th. What's this? This was Monday. Oh, this is weekly. That's why. Okay, so I think we brought it up around October 27th. I'm arguing with myself in front of you right here. Sorry. I'm a little bit, I don't know. I don't want to say the word. I don't think you could say the word tarded anymore, but I am a little bit tarded. I admit to it. But anyway, so we bring the whole scenario up to you because of this. I want to point you to some X posts that we have, okay? Right here. Okay, now I want you to read this twice. Amazon is hiring a crypto ecosystem lead, not a blockchain intern, not a Web3 analyst, a core strategy role that's to integrate crypto into Amazon's payment and commerce layers. One of the biggest companies is moving quietly. Okay, so this is for the long term. Okay, this is for the long term because we also have this post right here, the U.S. Senate. The U.S. Senate is pushing to pass a crypto market structure bill before Thanksgiving. The regulatory green light is approaching. Once it passes, boom, the door of institutional capital flows wide open. But now we are in a battlefield right now. So that's the long term. Now we're going to get into the short term battlefield. Okay. Now we all know the reason why Bitcoin's been having problems. Okay. Crypto's been facing some real headwinds. Why? Well, the market tumbled after President Donald Trump threatened to hike tariffs on China. Now that seems to all be resolved. So why isn't the marketplace actually recovering? That's a really good question. Because we told you that the big boys were going to try to push this marketplace down to get retail to puke. And guess what? They have. A lot of people have thrown up their hands and they left. But we took even more of a hit when good old the skunk Jerome Powell hinted that the December rate cut wasn't guaranteed. And then you had what? Rick from BlackRock come in and throw some salt on that wound, right? Because he's actually looking to become the guy that comes in later and does the massive rate cuts. But I also told you to watch the 10-2, the bonds, okay? And that's a longer term issue. But I tried to point you in that direction to keep your eye on the bond market. All right, so now this week, Bitcoin and its peers fell further amid doubts about whether the AI rally has gone too far. So now if we look at NVIDIA, look at this market, okay? It's getting whacked around right now, okay? If we look at AMD, another breakdown. Now we're talking about two of the, AI stocks that are getting hit. So Wall Street was hoping for this Santa rally, the classic end of the year melt up led by these guys, big tech. But right now the sleigh looks a little light. Now I'm not saying this can't recover, probably will. But you know how a market is always positioned for something. The obvious rarely happens. The unexpected constantly occurs. I told you to write that saying down. This is exactly what's going on with crypto, with stocks right now. Now, I'm looking at this market. This is like a market I should actually try to get in and get involved and trade with, because this would be an incredible add-on. Maybe we should do that. Start giving some AI tech stock signals. That would be cool. But that's completely for another time. But right now, if we look at NVIDIA, the poster child for the AI boom, shares fell 4% Tuesday, and now we're down another 1% pre-market on Wednesday. Okay, sliding right around 196. Okay, slight recovery right now. It's sitting like 198. But it's basically saying investors started to question how much growth is already priced into NVIDIA. Let's look at NVIDIA. I might look at the wrong stock again. Too much coffee. Yeah, it's right now 198. Okay, but we slid down pre-market to what? Again, arguing with myself. Sorry, guys and gals, but we went down to 197.93. All right, now if we look at EAMD, that's the one I had focused on right here. Okay, it's down also almost 4%. Sold off despite beating revenue expectations. What? Now I understand why Jim Cramer goes crazy. I don't really like the guy too much, but really I need some honking horns and bells and whistles too on my desk. I could see how you could want to use that. Okay, it's down despite beating revenue expectations. They literally came out and said, demand for compute has never been greater, and the stock still dropped. This is not fundamentals anymore. It's about valuation fatigue and risk rotation. So we could say this, when tech catches a cold, crypto's definitely going to start to sneeze. Now, if we look at Bitcoin overall, right now we know that's the ghost of the machine. I really don't want to keep looking at that. I just want to focus on this for a second. Bitcoin's traded like a high beta NASDAQ derivative all year. So when AI names pull back, liquidity drains straight out of the digital asset complex. Sorry to say, that's what's happening. Now the question is, are we going to get that Santa rally? Okay, are we going to get these stocks to start to recover strongly? Okay, now if we don't, we're going to get another leg lower. Okay, we need to get this. We need to get. We don't need. The market has to prove to us that these are starting to recover. So, but one encouraging sign right now for Bitcoin is that it has rebounded. Okay, over 100,000 after it dropped down to what 99,000 odd. Okay, so we're above 100,000. That's a key psychological level for short-term traders. It's the line that separates structured buying from full-blown panic. Okay. Now I know some of the retail has definitely they've been running around with their hair on fire. But we warned you about it. We said that, if it doesn't get above like 106, I said we're going to could possibly dip and break down through the 102, then 100, and we basically went to 100,000. Okay. The 99 was just a complete just stop loss running, and then they took it up to 103. Now we're sitting at 102. 780. Okay, now let's get into the short-term chart work. Okay, man, this is really really ugly. All right, so we came down to 98,944 on this chart. Okay, the all-important crawlback level was 102. We're above it, so that's the line that has to hold. There's the other level of support right down here at 98,189. This is right now we're in a bit of a sticky spot. Again, I'm only going to mention it a few times, and I'll mention it a total of 3 times. You got to get into a pro trading group because, as I said in the beginning, all right, we trade short term, but we have a long term vision. All right, so we do go short, we do go long, we do look to scalp. Okay, so we are in there because we have to. All right, so we're traders. We have to trade both sides of this, the ultra short term and the long term. So don't make a big picture trade turn into, or don't make a, well, you can't take a big picture trade like we're saying when we're looking at Amazon and we're looking at the Senate and all these expos. We can't take that. That's a big picture trade. We got to deal with what's happening in the short term right now, small picture, and we do that. So get in that group. That's number one. I won't say it again until another 2 times. All right, that's it. Promise. All right. So it slipped under 100,000. We recovered. That's a good sign. Now, as it stands right now, if I look at the market itself, so I would think that we need to clear over 103. Where are we? Where did we go down to? 98. Like 103, we got to get above 103. I'm going to move this down because this is absolutely useless right now. Let's go down to 103.5 or something like that. That's close enough. 103.658, 103.5. We got to recover over that. And we have to start building structure from here. Now, I'm going to get into it. Believe me, I'm going to get into it. We told you about this double top formation that we had that we said was the ghost in the machine. We said that the big boys were going to use this, and they did. Remember we talked about the regression channel up at 116.5. I said it was a beautiful trade, a perfect trade that they executed. I would have thought, and it was just complete conjecture on my part, that I would have thought that they would have taken back like 80% of their short right around 112,000. Leave the rest open, put the stop loss at entry, and let it ride. Well, now they might have left open 70%. I don't know, right? I mean, it was just conjecture, but I would have thought that. But anyway, so now we slipped down to 98. Now the question is, okay, the ghost in the machine pushed the market into fear and despair, as we said back in late October, right? The double top confirmation was loading up. If we said if we lost 106, we were going to go to 100, and it opened the floodgate possibly to 90,000. Now I'm going to dispute that 90,000 in this video, okay? Because right now we had the retrace to 99,000 odd right now. So let's talk the structure that itself. If I was to put up a weekly regression channel, the midpoint right now sits right around 98 to 100,000. So that's the battleground right now, the 98 to 100,000, okay, off of a weekly regression. So it's right here. It's all in this area right here. Let me put a little circle around it or something. Let's do that. Let's put a little circle. So here's the battlegrounds, right? Right in here, okay? 98 to 100. That's the battleground. If we lose that, then we can start to open up really that 92,000. Okay, now, we've also always said that if I look at Bitcoin, it loves to pump, it loves to shake out first, then pump, right? November 1st of 2024, it was a 5% fake out and then a 50% vertical move. This November 25, we're already down 10%. Now we have the same pattern. We got double the fear right now because we're down 10% instead of 5. So if the playbook repeats, get ready. Now it's not going to happen immediately. We'll guide you through it. So get into our pro group. That's twice. Okay, now this is what I was thinking. Now I want to take you over to this chart, and why isn't it loading up? Hang on one second. Let me fix this. Okay, here we go. That now it's loaded up. All right. This is what I was thinking, and so far have not been proved totally wrong. Okay, if we always talked about the delta of Bitcoin should tighten up. So the average Bitcoin delta has been 30,000. If I was to take the top of 126 and I take out the 30, that pulls us to a 96K level. Now we haven't touched that yet. Now a significant break would say that I'm wrong. Now a significant break, we go down to like 94. Okay, that's a significant break. Or we go down to 90. All right, let's go down to 92.8. If we go down to 92.8, that's a significant break. That's dangerous. Okay, but what we're seeing right now is that Bitcoin's delta is being very responsive to macro and equity markets, and it so far has tightened up. In other words, it's no longer purely standalone risk assets. It's that's playing its own narrative. It's increasingly trading like a tech stock, high beta, high correlation, sensitive to sentiment, earnings, and rate cycles. Okay, so it's definitely playing that game right now. Now, that means that when tech or AI names crack, like what we're seeing here in NVIDIA and AMD, Bitcoin is under pressure. Okay, so for us traders, it means that we adjust. We treat it like a high beta equity exposure while still respecting its specific triggers. Bitcoin's very, very sensitive. It really is. It's very sensitive. Don't hurt Bitcoin's feelings. Okay, could take you down, could dump down even harder. So talk kindly of Bitcoin. All right. So anyway, we got some supporting facts that I have backing up my bloviation here. The CME group notes don't grope the CME. The CME group notes that Bitcoin's correlation with equities, example the Nasdaq 100 has moved up from near zero earlier this year to around 0.4, 0.5% in recent periods. So that's good. We also have on-chain structure for Bitcoin is tightening. Okay, if you look at price concentration, it's within the 5% range. It reached a 2-year high at 17.6. Now, that for me suggests underlying liquidity and positioning is getting compressed, which often precedes sharp moves. So keep that in mind. Now, I can still argue that Bitcoin likes to dance its own beat and not just a tech stock. But you have both sides that's happening right now. Bitcoin is increasingly equity sensitive, yet retains unique triggers for sure. Now, if we look at this chart, what this chart is basically saying is it's a complete manipulation phase. From what I just told you before, that basically we have underlying liquidity and positioning are getting compressed right now, which often precedes a sharp move. It's going to be a sharp move as long as we hold the 96 upward, okay? So we're seeing manipulation. Is it ending? I can't tell you whether or not it's ending. We're still in the accumulation check. Manipulation is playing out right now. It's just playing out. And we're waiting for distribution. That's loading. But we got, this is, once we break out of this, the distribution is going to become, it's going to turn into vertical moves upward, which will, you've got to watch the reclaim of certain levels. That's get into the pro group. That's the last time I'll say it because we'll be talking about it. And we're believing that the breakout is going to be brutal because if we really look, Bitcoin right now feels like it's in a bear market. Everybody's saying it, you know, we got a lot of the astute posters on our YouTube. Tom, you're crazy. This is a bear market. You're in denial, and denial's not just a river in over in Egypt, right? So anyway, but look, this is my argument. Price is still hugging the 50 MA. Same structure as every mid-cycle dip. The same fear, the same indicator. Now, of course, you got to buy. We're thinking you got to buy where the fear peaks. Now, is the fear over yet? No way. No way. Look at, F&G. I mean, look at F&G, 23, extreme fear. So, of course, retail is going to catch this late. When the market starts moving up, then they'll start feeling more comfortable. But this is the best time to trade, man. When markets are like this is the best time to take advantage of the unknowing. Okay. Unfortunately, that's how we transfer wealth when people, they don't understand markets and, we can pinch some of their money. That's for sure. All right, let's get on over to Ethereum. Ethereum, man. Ethereum itself falling out of our bull flag pattern. Not good. Not good. But still reloading. Now, Ethereum followed lower towards 3,300, the 3,400 zone. We're going to get into altcoins in a moment, but man, they're bleeding double digits today. So anyway, Ethereum's fighting, at critical support, it got down below 3,600, 3,700, not good. So the next level of support, it needs to really reclaim right now 3,450 short term. If it flips, short-term momentum, if it can get back above 3,450, we could flip short-term momentum back to neutral, not positive, just back to neutral. So if we fail there, we're looking at 3,100 accumulation shelf. That's just a fact, okay? Before the buyers basically step back in. Now, what I believe is actually happening is this is really a liquidity cleansing phase. The market's wringing out leverage, not killing the overall trend of Ethereum. But it's it's painful right now. Now remember, short-term pain, is basically long-term gain. So keep that in mind. Short-term pain is long-term gain. Now, last and final time, if you're in pain and you're not understanding what's going on, get into our pro group. Remember, because always a problem shared is a problem halved, right? So we'll help you work through this. All right. We don't trade emotional. We trade like traders. Okay. We look at the market and we take trades. Now, we look at Ethereum itself. Liquidity problems are still facing Ethereum, and we look at it right now. We got the 3,000 level, and we got the main support 2,700, and the overall deep level actually right here at 2,000. And look at this, 1,400. Now, I don't think that we're going to drive down that far. If we did, it would be absolute gift to really just really load up on Ethereum. But right now, as it stands right now, the leverage washouts have taken over the tape again. There's been $1 billion in long liquidations in just a few sessions. This isn't just a crypto story. It's a macro correlation story. So it's happening across the board. When the liquidity dries up, the risk assets bleed. And right now, the market's showing you exactly what it means to have the liquidity dry up. It's happening, okay? So if we look at Bitcoin dominance, we get into Bitcoin dominance, all right? Look at this. Bitcoin dominance still at 60, all right? So therefore, Ethereum and all the alts right now got no chance because really people are just in Bitcoin. They're escaping, they're rebuying, there's a lot of stuff going on in Bitcoin right now. But, we're going to get into alts in a second. But before we do, let me, tell you how you can get involved in our pro trading group. The link is in the description of our videos. You click this link right there, you'll be taken over to our Telegram community where you can join our group. Completely free to join. Okay, we offer insane alpha. We offer trading opportunities every day, shorts and longs. If you choose to go it alone, all right, well, you could click this link right there, be taken over to WeX, where, low fees, fast execution. They're offering, crazy bonuses right now. I believe it is like no fees for life. Really a great broker. Also, we offer something from BTCC. They're giving away 500 USDT giveaway to help you out if you have a small account. Not bad to bump your account up by $500, right? But really what we do is we suggest that you come on over and join our pro group. Level up your trading. Let's stack the profits and the stories together. Everything you want is right here in this group. All right, let's move on over to altcoins. One last focus, Bitcoin. All right, Bitcoin dominance. All right. Altcoins are the weakest link in this whole thing. So until Bitcoin stabilizes, alts aren't going to catch a bid. It's that simple. So you got to keep that in mind. So historically, alts only outperform after Bitcoin and Ethereum find equilibrium. So right now, it's a time for precision, not, spray and pray. Okay? Don't take the shotgun approach right now. Don't lose your head. Okay? So what you got to do is you got to pick your battles, size small, and wait for Bitcoin dominance curve to top out before chasing any type of rebounds in altcoins. Just keep them off. Just keep them off your screen right now. Don't make any emotional decisions. So again, if we look at altcoins itself, all right, we look at, and we're going to be using the 50 EMA on this again. Okay, right now, the 50 MA is the battleground. Sentiment, nukes it, right? Narrative is we're going to zero. There's no alt season. It's the same fear. We got the same setup that's behind everything. But look, this is the exact combination that triggered the last two major rallies. Now, you got to be patient with this, okay? All right. You look at the fear and greed. You just be patient. We'll help you out. Okay. We told you that. Actually, come back and watch my videos because we talk about it. Right. So really, do what you will, but be ready. Okay. Now, look, I want to take you over to one final X post. Okay. I want to show you what we put on X. We posted here. The fear is manufactured. Look, the bull market peak indicator. 0 out of 30. This is the same system that called the 2017 top and called the 2021 top. Right now, it says that we are at 50% progress. We are mid-cycle right now for everything. It's not exit liquidity season. Okay, so come on over. Make sure you follow us on X. All right. So now let's close with this. All right. And we got to make sure that we keep an eye on NVIDIA. We keep an eye on AMD. All right. This is really where the pros and retail part ways, we could say. Retail sees volatility. We're seeing opportunity all over the board. Okay, the secret isn't predicting the turns, it's confirming the reversals. And if you look at these two stocks, they're going to help you try to time and confirm the reversals. So make sure you come on over to X, follow us on X where we talk about Bitcoin, crypto all day, every day, and make sure you do a few things. 1, think about joining our free pro group. 2, trade with your head, not over it. 3, do your own research. As you know, I am not a financial advisor. I am a trader just like you. And 4, as a short-term trader, enjoy the party, but dance near the door. I'll see you tomorrow. Cheers.